Were you surprised at the number yesterday?
Well, I'm not surprised at the data. What I was surprised is how the market got caught leaning. So there was evidently somebody out there with a quote unquote whisper number, as we call them, thinking that because the market had done for 3 days, from Thursday, Friday, Monday, you had the S&Ps basically closing on their highs each day. The metals performing pretty well. The commodities performing very well. The bonds were doing what the bonds ought to have done in that kind of mixed environment. There was one outlier, which, and I went home short the S&Ps on Monday against some Canadians. So I had some spreads on, and I didn't really trade them very well for as well as I was set up. And it weren't hurting me because I was trading them in such a way. So even when the S&P was up, don't forget it was up 30, 35 handles in the morning.
Yeah.
And I had orders to sell up above that got within about 12, 13, 14 handles, but I didn't want to sell them into it. I said, this market's performing way too well. Somebody knows. So I was hoping for a really good inflation number, because then I was going to really get aggressive selling, because I said, well, you know, we're beyond that point anyway, I think, in the whole view of things. But okay, if you want to bring it to me. So I didn't get to, and then I covered my shorts and was waiting for a bounce that I never got. And I said, okay, do not chase this market anywhere.
Did you cover on the way down, or did you cover after it made the low and bounce?
Oh, no, believe me, I left 100 handles on the table. Well, you know what? When a market performs like that for 3 days, you have to feel it's onto something. So, you know, I thought the part of the variable was, of course, well, the Russians were getting beat back in Ukraine, so that may be a little positive. But the dollar was soft after, you know, rallying. There was one outlier, and I saw it on Monday afternoon, that the D Fed funds contract closed on its all-time lows on Monday afternoon. That was the outlier to me. I go, something. But when I saw what they did on Monday night and into Tuesday morning before the number, I go, well, you really have to respect this. I mean, somebody knows something, but evidently not, you know, and it's the world in which we live in. But I love it because, again, this sets up the trade. And you saw what the interest rate trade did yesterday, right? And now we're still flattening, meaning more inversion. I mean, we had a huge range in the 210 yesterday and the 530.
Huge.
Flattened dramatically and inverted. Well, the 530 had been at +7 and wound up closing, I think, at -8 or 9 yesterday. So those were very heady moves. And right before the CPI came out, the 210 was at -19 and wound up closing, you know, like at -33, 34, and had big swings. So you've had incredible moves in various things, because now people are thinking, you know, and Larry Summers out, oh, we're going to raise 1%. Okay, you know, or they possibly could raise 1%. You know what? And as I talked with Joseph Wang in that podcast, you know what? I've had most of this very right. And I think the Fed is going about it wrong. And interesting what he says about that. He says, you know, you might in that first, but we get certainly more into it and more quantitative tightening issue. Again, I don't think much of Powell. I think very little of Powell. And at one time I had hope for him when in 2018, but I can honestly say that in July of 18, I was on with Santelli early July and said, well, yeah, he's on the right track, but you got to go one way or the other. And 2018 is right now very different, because you had real yields go positive, because we got the Fed funds up to 2.75, right? 2.5 to 2.75 with the inflation rate at 1.7. So you had real overnight yield, real positive yields. This is a friggin' joke. And don't tell me about the 3-year break evens. I don't want to hear about it. I know people look at them as an indicator, But if you're fighting inflation and you want to search for your interlocutor, you better damn well go to real positive yields on short-term money. And you ain't nowhere close to that.
Is there any way that he can find his interlocutor with as the Fed increases quantitative tightening?
We don't know. This has never been done before. I say no. And we actually have and quantitative tightening. Now the media is starting to write a little bit about it. It's unbelievable. It's truly unbelievable that they don't push at this. They write what they're told to write. That's the way I see it. Nick Timmerose, you know what? If one more person sends me, ooh, the Fed whisperer, to me, he has no credibility. Because if you're only writing and you want to be the go-to because it enhances your pay, I get it. That's perfectly, I'm a capitalist. That works for you. But don't ask me to accept the validity of your writing, because again, it's like being in the city of Chicago. It's like, you know, somebody who writes about crime, who sits and waits at the FBI office or at the police and waits for somebody to drop a dime on him, so to speak. Oh, here's your story. You know, you have no credibility. You know what? You're a pimp. And that's what I view. Sorry, Nick, but you want to fill that role, I'll call you a pimp, because they'll use you as long as they have use for you. But why don't you go dig for the story? And if that's harsh, too fucking bad, turn me off.
That's a great point.
Because I don't know what the hell I'm talking about. I'm telling you from a user's perspective, you want journalists who push the envelope to search for real issues, because that's what's going to help you.
Yeah, I wonder how many people, journalists in particular, maybe had noticed that the number had leaked with the Fed fund outlier the day before, you know, and if so, is that even of interest to anybody?
Yeah, and if that's the case, if that's the way markets are going to work, well, then you know what? Then just sit back and wait for the next leak, and don't do any work, because, and if I do that, well, I'm just going to shut my computer down and be done, because I just, you know, I know that won't happen anyway, and all it does is provide you with more opportunities, but it gets a little irritating. Go do some work. Dig into quantitative tightening. How is it going to work? Who's going to be affected? How much leverage is out there? Stop being a patsy for the powers that be. Stop desiring access, right? As my dear daughter Alex taught me, good journalism afflicts the comfortable and comforts the afflicted. And you know what? Sorry. Go afflict the comfortable. Those are the people who sit at the Eccles building and, you know, who sit on the Fed board. Go afflict them. Go make their lives miserable. Go push hard and challenge them, because that's the only way we're going to get the information. I've done enough lecturing for C.C. Rogers, who was a professor in journalism at adjunct professor at Northwestern, and for several years I would lecture once or twice a year, or 3 times for her classes, because they're on the quarter system, and I would always leave them, these graduate students in journalism, going, the tougher questions you ask, the easier my job is, because it'll make you worth reading. And I find this okay, but it's another thing I have to deal with, so I just deal with. But you know, my mailbox filled. Oh, did you see what Nick Timmerose said? And these are people who work on desks. I said, well, what is your job exactly?
So, what do you think they're going to do now? Next week, more?
I mean, now they're going to build this conversation, so I guess they're all going to wait for Nick Timmerose. I would say they'll go 3 quarters.
Would you be surprised if they want to point?
Well, right now it's priced into it, by the way. So, well, it's not quite priced into it, but you know, if you look to see what the Fed funds did yesterday, now they closed under low on Monday.
Right.
Under all-time, I believe it was their all-time low for the contract. And so I'm speaking for the contract. And yesterday they were down another 25 basis points afterwards. So right now, as I sit here, these Fed funds is pricing in 4% for December,
Well, there we go.
maybe a little higher. So will you tell me, let's see, we're at 2.5. If we, next week we get to 3.25, that's, and then there's 2 more meetings. So you do the math, you know, it's, I don't mean to be rude, but that's where that puts us. Now, I can tell you what, I said it in 2018, I'll say it again. And I'll pick up on Druckenmiller. It's interesting, we haven't heard from him anywhere. Well,
That's a good point.
the media is probably too lazy to go figure out who he is. But Druckenmiller, you know, as he called it, the double shotgun approach. And I talk about this quite a bit with Joseph Lang yesterday on the quantitative tightening. If I was Powell, okay, if you want to do the 1%, do the 1%, but say we're stopping here on Fed funds. And we're going to wait to see what the impact is while we continue with the full quantitative tightening, because they don't know the impact of quantitative tightening. You know, and even Joseph was, you know, because they talk about it. It's like Waller last week. Well, if you do 2 trillion of quantitative tightening, it's equivalent to 50 basis points. That's pure bullshit. They have no idea. You know, Powell started laughing about that, I think at the July press conference, when somebody talked about it, he said, well, some of the models say $1 trillion is equal to 25 basis points. They don't know.
No.
Oh, because again, that would require, they don't know how much leverage is in the system. And quantitative tightening could be so much more dramatic. And I've postured this for 4 years already, 5 years. I knew it wasn't going to be like watching paint dry. Remember, that was Janet Yellen's famous line in 2017. So because of the amount of leverage in the system and you're draining liquidity out, you don't know. You don't know. And I'm going to tell you what, saddle up and ride with the bond vigilantes, because the volatility that's coming in the bond markets. I mean, you think you've seen something now? You may see nothing yet.
Wow.
Because see, once the Fed stops buying, right? Once QE is over, the bond vigilantes who've gotten the shit beat out of them for 14 years, it's been a no-win being short bonds for the most part. Yeah, you get movement, but what ought to have taken place? No, it was prevented because of the massive amount of market action by a myriad of central banks, but especially the Fed. So it's like trying to be short bonds in Japan, right? It's been a very rough road. It's been a very, very rough road. But I know this about markets. They will wreak their vengeance. And you know what? The academics aren't prepared for it. Right now, the Fed feels pretty good just for what you talk about, because the curves are inverted, the 3-year and 5-year break evens. So they're going, oh, the market has the market's telling us that we're right. For a group that disdains markets, they like that. Because they're saying, well, you know, we don't see the 3 years, the 10 years trading at 344, 345. Well, they believe that we're going to be successful. Okay, I'll give you that until as quantitative tightening really starts to take hold. And we saw this back in 2018. You remember last quarter of 2018? Yes, got crushed. And the bond market got crushed. But there was some, and if my premise is wrong, the bond market ought not to have gotten crushed in 2018, because you had short rates. So you had real yields were a positive 1%. And the curves ought not to have steepened like they did. They should have really inverted if they were betting on it, but because people were selling bonds without and the Fed was actually selling bonds. So you ran into that situation and we went the other way. So let's see what happens here.
Crazy.
See what happens.
Thinking about the bond vigilantes coming back and having control of the market again, where's that going to push rates to, especially on the long end? How high?
Well,
are we going to see the 70s again?
Well, Joseph and I talked about it. I said, if I'm right about this, and he didn't disagree, mortgage rates will be 8% in 6 months.
Easily.
I don't know easy, but that's what he said too, because it all depends how much, because you're moving the coupon bond market, the duration market, into private hands from the central buying authority. That's what's going to take place here. And if they start to actually sell mortgage-backed securities, which they may have to, because if they're going to meet their 95 billion a month requirement or objective that they've set out, there's going to be a shitload. And when private hands, see, don't forget, and I talked about this with Joseph, and I've talked about it in this room, the Fed doesn't hedge its portfolio. But when you move these duration instruments into private hands, these are hedgers. They have to hedge. And you get convexity issue. You got all kinds of issues that have been a variable that was removed from the market because of the massive amount of what the Fed did. So I don't know. Mine is a conjecture just like everybody else's.
Sure.
Fed's conjectures have been dead ass wrong, and don't have the temerity to tell me, well, it's going to only be a 50 basis point impact. You don't know that. You don't know that. And from your previous estimations, you've been dead ass wrong. And now I will throw in, just for shits and grins, a 15% move up the dollar. What's the equivalent of that? And I'm not the only one asking that question. Now Yardini's asking, and others, and Al-Arian, and it's a serious, serious question. But again, at the last Fed press conferences, was there one mention of the dollar? Now I know what the Fed's answer is going to be. The dollar is not our responsibility. I got news for you. Because it's a financial instrument, not a trade instrument, it's absolutely your responsibility. You may pass it to the Treasury, but I would argue vehemently with anybody who wants to take up the cudgel that the impact of the dollar on U.S. trade, and Joseph and I talked quite a bit about this, is negligible. If oil, like right now, is trading $85 or $88, and it stays there for 1 month, and the dollar keeps rallying, it doesn't have an impact on the U.S. whatsoever. Commodity prices, because they're already priced in dollars. The only way that a higher dollar is positive for the U.S. Inflation numbers is if the global economy slows down because of that higher dollar. So if people start dumping all types of, products, raw materials on the market and drives prices lower because of a global slowdown, yeah, it's a positive. But coming with that is going to be a huge amount of financial stress. And you're seeing it already. Sri Lanka, Pakistan, Venezuela, Argentina. And yesterday, somebody else announced they're in severe trouble because the stronger dollar is choking them. Now, as Augustin Carstens from the BIS talked about back in June when he was on a panel with Powell and Lagarde and Andrew Bailey from the Bank of England, he talked about that what's going on, and the reason you're not seeing a lot of stress in the emerging market currencies is because the biggest ones like Mexico and South Korea and others have been raising rates to get ahead of the Fed because they know it's like the peso. If you look at the peso really hasn't moved. Why? Because the Bank of Mexico has raised rates. They've been way ahead of the Fed. So here, I'm going to put up my cash peso chart. We've been at this level. Let's see what the range is for the year. Very small range. A very small rate, but one of the smallest ranges. So the range has been but it's come at the cost of them raising interest rates fairly dramatically. Well, that's a further drag on the global economy. So you're going to okay, I agree. For those who talk about, well, a strong dollar is good for US inflation, only if it brings the global economy to its knees. Because the other side of it, and actually Joseph made a very good point, and I hadn't really thought about that. And he said, because I always worry about the amount of debt that's denominated in dollars, and this is going to wreak havoc. And he said, yeah, but because of the debt, the global slowdown will take place faster. And that will be a positive for inflation. It will be, but I worry more about the financial outcomes.
Can you say that again? Can you say that again?
You know, he thought that don't worry about it because the massive amount of debt will become a bigger drag and will lead. They won't have to go as far, of course, raising rates because the slowdown will come faster and more furious. And you can, you know, he doesn't say that, but that's what he. Right. But he was right. I had to think about that, and yeah, but what comes with it? I've lived through too many of these, and you could see the financial stress is building up. So those are the things we talked about. It's truly worth a listen. I listened to it last night, and I said, well, this was better than I thought. So, but I'm telling you where I think the lay of the land is, and if I'm right about quantitative tightening, and what the Fed is going to do, that these curves will actually begin to steepen rather than keep inverting. I don't know what level they're going to get to. So I'd like to see, from a selfish perspective, I'd like to see a 1% raise next week, just to test what I think is going to happen. Because now the 75 is baked in. The full 1% is still an outlier. So I don't know. I like to see the market test certain theories that I have, or conjectures, or not theories, or more conjectures based on my historical knowledge of the markets and the way that I put in the prism in which I look at them through. So I do want to see that. And if I'm right, it will get, and Joseph really thought about that too, because once and the banks are getting kind of stuffed here because Dodd-Frank has a lot to do with this too, because of the amount of bonds that they're able to buy and how much margining and the Basel III. So there's going to be a lot of things that get tested here. We've already learned, okay, that when Yellen said, and Bernanke felt the same way, the unwinding of the balance sheet that we had built up would be no big thing, as Yellen said. And I'm sure she regrets those words, watching paint dry. We know in 2018 it wasn't paint dry. And this one doesn't seem to be any different, although they think they have the tools in place with the reverse repo facility and the standing with the reverse repo program and the standing repo facility. So they think that they have tools to keep it, but we shall see. This is going to take a little while to play out. Now, interestingly, one of my favorite charts, the SPOO bond is actually holding in there pretty well. And up until yesterday at the CPI number, if you put that chart up, it was doing better than well. So now, is that a function of real yields on the short end still being negative? I say yes. But we shall see. But if you really look at that chart,
there's going to be some huge trading opportunities. You know, we've talked a lot about this over the course of the last couple of years, and here Judd's room all over the place is that, you know, we've entered into a prolonged period of volatility, and that volatility isn't going to go anywhere. And you know, another one of Judd drilled so many things into me over the years, and one of them is this line of get out when you can, not when you have to. Get out when you can, not when you have to. Pretty soon everybody's going to have to, whether you're talking about the housing market, you're talking about right before you guys got into the quantitative tightening conversation yesterday, which is where I left off, is when Joseph Wang was talking about the current employment situation around the world, you know, aging demographics, aging workforce, you know, especially in China, and
right, yeah, he was
education. All of this is unbelievably interesting.
Well, again, because what it really does is measure the Fed and other central banks were able to fool themselves with the impact of globalization. Well, I've talked about that for a long time. Demographics is not a great area for me because he's put a lot of work into it. So, you know, I always listen to it. You know, Gartman used to talk about the demographics. You know, it's not the first place that I go to. And, you know, everybody wants to look at it from a potential inflationary standpoint because as demographics shrink and your liabilities still remain, you know, especially your liabilities to your retired people, with less workers, wages have to go up. So, I mean, I'm sure there's a lot of validity to it. I can't speak to it. It's just, you know, I like to look more because the way that I study the world is the impact of globalization, and why I always felt that the Phillips curve was flawed because it was a domestic measure. And actually now maybe the Phillips curve is going to come back into and be held in higher regard if you get some more facets of deglobalizing. So we'll see. We just don't know. I mean, it's a heady argument going on. So I'll continue to look at it and watch it, but it's worth entertaining. But there's no question here. The Biden administration is going to do all it can to prevent that rail strike from taking place Friday night.
Right. Yes. Yes.
So, you know, I'm a private union, you know, private unions, as I said, I say with him, go get all you can. Go fight and battle for every nickel you can. Public sector unions, go fuck yourself. Sorry if I offend anybody. It's kind of hard for me when you work for the government who you worship at its feet to pursue that. But okay, we can have that argument. But private sector unions, from a private sector union family, go battle and fight for every dime that you can.
Hey, Ira, any comments on, well, we saw some data come out of China in regards to their overall crude demand being down 10-20% year over year. But I'm just curious of your thoughts around what Xi's doing with these lockdowns, which are seemingly endless, with the zero COVID policy, because you can kind of see how it's showing up in the publications and the news media outlets. They're talking about China in lockdown, their crude demand is down 10 to 20% year over year. It's really interesting to me what their take is on with these high commodity prices. When crude was trading over 100 to 120, they really stopped their imports and they really slashed their refinery output. So it's going to be real curious to see how long these lockdowns go on, because what I'm seeing is a lot of crude demand, China being second largest economy in the world, I think number one importer of crude. What Xi's game plan is with these lockdowns. Is he locking down his people to keep commodity prices lower, as what we kind of saw during COVID when they started loading up on commodities and expanding their manufacturing?
That was what's his name's had that theory about that. Oh, well, it might have been no, it wasn't Louis Gavet. It may have been Daniel Lacaille when I did that podcast. So I'm glad you asked this question. This is a very important question. Right now we don't really know these numbers, Omar, because China's buying a shitload of oil from Russia.
Yeah.
Are they revealing totally what they're buying? Not that they're not afraid of being sanctioned by the U.S. Trust me. Every time I hear the word sanction, I go, yet again, here we go. Another program that, it's okay. We can watch every Ukrainian die and we'll never lose anybody, but we'll support you with sanctions, whether they work or not, because that's the greatest virtual signaling you're ever going to get. Okay, so but the Chinese, there is something going on here. And, again, it comes to the dollar, but I'm glad you brought this up because China's in trouble right now. And I say that they're in trouble because I see where the yuan is at 6.96.
Mm-hmm.
Okay. And I think we hit 7 to the dollar. Did we get up there? Hold on. No, the high we made last week was 6.98. Okay. Now, I will say that I had China back in 2020 of May, June, all the way for the next year and a half. I had China pretty well analyzed, and it made me some very good trades, not necessarily in commodity markets, although I did more in stocks because I bought food and not energy, but I bought food and mining companies because I saw what the Chinese were doing with the yuan, forcing it stronger at a time when they would traditionally have been weakening the yuan to ensure that their economy didn't slow, right?
Yeah.
Because that's traditionally the way the model would work. People say, oh, China will devalue or let the yuan slip because they want to protect their exports. But that's not what happened during that period of COVID, of intense COVID slowdown around the world.
Mm-hmm.
China's currency went higher, which told me, and they proved right. They were busy stockpiling copper, steel, grains, whatever they could by using a stronger. It was a brilliant strategy. And they were able to enrich their middle class because when your currency, when you're importing things like that you need for manufacturing and the backbone of your economy, you're enriching your middle class, and that's what they did. And if you remember last year, they had stockpiled so much, and when prices really started when everybody else realized, hey, I got to start buying stuff, they opened up their stockpiles and actually sold off grains and industrial metals to their manufacturers. So at lower prices, because they were still making a lot of money. This time, with all that's going on, the yuan is weakening.
Yep.
Now, that tells me things are not good in China right now because they still need to buy food. Because I'm going to tell you what, China is in severe drought. The Yangtze is low, the farming is low, the rice crop is under stress. Now, I'm telling you, I will tell you this. I've been trading rice. It's a shit trade. It's an absolute shit trade. But I've been trading it because I've been watching it. And India just cut off some of their rice. And India is, I think, the largest rice exporter in the world. They've cut off some of their rice exports. The United States is the number four rice exporter in the world, I believe, which is kind of interesting. But because we subsidize our rice growers, there's an excess amount of rice, so they export it. Keep your eye on rice. I'm not telling you to trade it. Don't say, oh, that's not what I'm doing. It's
Right.
just those things that I'm watching. But as the price goes higher and China needs grain, they should want a stronger yuan. So this carry, you saw what happened in the soybeans yesterday. And I've been bullish beans. Everybody's, I've been listening to, the tours that go around. Who do we got? Where are my farmers? Oh, where's Jakey? Jake, what's going on the farms?
Yeah, so the bean that Velocity came out Monday and boom, 75 cents up, and it continued even a little bit yesterday, but even with the, all the bad news with the CPI and everything else, it didn't really back off much. So
no, right. Somebody needs grain and somebody's been buying. And I think it's been underreported as we've been watching all the tours, of the crops and, and beans, when beans got down to 12.80, I'm talking about on the Nove, 13.10 in that area. I said, but China needs this stuff. There's no question. And Xi, right, next week is a very important week for China, or not, but in October, not next week, but in October, because you have the plenum and Xi wants to basically be appointed for life. Now, I don't know if any of you read Foreign Affairs. There's a very good article in Foreign Affairs about somebody who used to be inside, but has to live in America because he fell foul of Xi and the party. Kai Jie is his name. It's worth a read. And
do you think some sounds have to do with that date too, that they're continuing their lockdowns until he gets to be elected leader for life, essentially?
Yeah, and there's now some suspect that watch this, because if he doesn't get that, I think it's a positive for China, because it shows that the insiders are rebuffing, and it's not that he's done anything, a lot of things that the guy says, I absolutely agree with. And I could see that he was changing over from the Dung years and kind of rebuffing Dung. But I'm watching to me, and I'm glad Mark asked the question, because the weakness in the yuan tells me that China has real problems. Now, saddled with that, by the way, is one of my favorite, and I think it's a very important currency cross, and everybody in this room knows that currencies are my first love. They don't blind me, but I watch the currency markets for a lot of my critical keys to the things I see. But right now, one of my most important crosses is watching the yen versus the yuan. Now, the yen yuan, it won't mean anything to you, most probably, maybe to Matt, because he likes to fuck with his own head. And I take this back to 1993. I know that it's been that the yuan has had different crazy valuations against the yen. That's meaningless, because China was not part of the global economic system through the 60s, 70s, and 80s. 80s, they start to enter it. But the key date to me is of course, January 1st, 1994. Well, I will tell you this, at this point in time, we are sitting above those highs made in December 93, 94, and again, important highs that were made in June of 98 for various reasons. And then we made the highs back in 2014, 2015, when China, basically had saved the world, and the yuan was doing pretty well and the yen was weak. But, and that was after, of course, the Prime Minister Abe of Japan's 3 arrows, which was intentionally done to weaken the yen. But we're sitting, the yen is weaker, even with the weakness in yuan, the yen is weaker. And this has always bothered the Chinese. Well, always, over the last 30 years anyway. So it's something to watch here. And I'm watching it very closely. And everybody's talking about, well, oh, you can't do anything with the yen. Oh, they can't intervene. This yen is a problem for the world. And it really bothers me that Janet Yellen doesn't talk about it, because the weak yen is hurting Europe, and Europe doesn't need any more pain.
Huh.
And the Chinese are right now, China, it tells me that China really is having some problems, because they generally be making noise about the weakness of the yen. And I could see it on the crosses. Now, people got nervous overnight because the Japanese central bank and the finance ministry, whose role the yen is really, were busy, jawboning, so to speak. And so the yen turned around and is actually higher. But on the crosses, the yen is still phenomenally weak. So when they talk about the dollar, let's see, the euro is, oh, I hope I'm not boring you. This is,
Speaking of Europe,
Seriously, take notes.
yes.
mention that yet. I mean, what do you think of that? The whole price cap on the energy thing. I mean, do you think that's bullish to energies yet? Or, I mean, are they making a?
Hold on. We'll get there. It'll be the next one. But you see, the euro is basically down 13% on the year. The euro. Right?
Yep.
These are not insignificant, by the way. Just I'm sorry. The yen. The yen is about 21% lower for the year.
Hmm.
Now you can say, well, yeah, that's good. It's the dollar and they're fighting inflation. It's bad from a global perspective. And again, and I talk about it with Joseph, everybody talks about the inner Volcker. Yes. But we know that Jermone Powell, he can never find his inner Volcker, because the yield curve inverted to negative 700 basis points when Volcker wanted to crush inflation out of the system. But Volcker didn't have some of the serious issues that Powell faced, especially on debt. And I tried to fight it back in 81, 82, 83. I learned some very valuable lessons about certain things and the way things work. As the dollar rallied after being very low, but the dollar rallied so much that they put together the Plaza Accord under the guidance of James Baker.
Huh.
Because the stronger dollar was killing what you guys are probably all too young, but what were known as the Reagan Democrats. When Ronald Reagan got elected, he got elected with the blue collar vote in mass from middle America, because they had grown tired of the policies of Democratic Party. And those Reagan Democrats were very important. Well, when the dollar started rallying with Volcker doing what Volcker did, and he had to do it, James Baker got worried that they were hollowing out what became known as Rust Belt America. Believe me, I live in Chicago. Matt lives in Chicago. The effects were real. Steel plants closing, automobile plants closing, and it was everywhere, tire plants. So Baker tried to save it because the US was getting its ass kicked in trade because the dollar was just too strong. In order to fight inflation, the dollar had to become too strong. But you didn't have the amount of debt that was carried around the world like it is now. So this is, I think, one that prevents Powell, and the fact that nobody asks him the question is mind-boggling at these press conferences. But okay, that's just me. It's amazing. The debt markets, right? The bonds are higher now, but that's because the curves have flattened even more. But okay, I digress. So it took the Plaza Accord to undo what were some of the worst political fallouts from Volcker. And Janet Yellen is sitting here quietly. They need to prevent the dollar from going higher. If the Fed has to keep doing this, they're going to crush the world. And the fallout, and when they retrace, it's going to be worse than anything. So my point, and others are raising, Gunlach says it, and Musk, and Elon Musk is, he bothers to know about other things. He's just not a technological genius, an industrialist, an inventor. So he said, stop, and he's right, you slow this down. Keep on with quantitative tightening, stop raising rates, because with the dollar in quantitative tightening, you're having that impact anyway. Stop and find out what exactly is the fallout from what you're doing. But they're so friggin' arrogant. And as I end, and then we'll get to the European question. But there's 2 new governors on the Fed that I haven't heard a peep from. Now, if I was Dave Chappelle, I would probably say that they don't let them talk because they're black. Lisa Cook and Philip Jefferson, but that's if I had my Dave Chappelle on and I wanted to be a cynic and sarcastic and a little joke, but I know that. But they haven't said a word. But the interesting thing is when they got nominated and they got approved, when they were passed by the Senate, everybody talked about how important it was. They were labor economists. And I went and looked at their research because I really didn't know of them, either of them. And they're labor economists. And I have not heard a word from them. How are they feeling about this? Because if, as Larry Summers says, we have to go to 6% unemployment to squeeze inflation out of the system. Well, to quote my good friend Jermone Powell, and I'm sarcastic yet again, what are we going to do with those 3 to 4 to 5 million people who lose their jobs through no fault of their own? Right? What did they do? They got caught. They didn't cause the inflation. So I love when Powell used to talk about, well, we have to keep on, we have to keep on keeping on, to quote his newest phraseology, with sustaining quantitative easing, because until everybody who lost a job through no fault of their own, how many times did he say that, has a job, our task isn't over. It was, as I very sarcastically called him, he was no longer just the Fed chair, he was now this Minister of Social Justice. And look where it got to him. Exactly the trouble that was easily predicted by anybody who thought this through. And Larry Summers wrote copiously about it, to the chagrin of many people. And he wasn't the only, Druckenmiller, many others who said, stop, consider, and let's see where it's going. But don't forget, they pursued QE all the way to March of 2022. Now, I railed that they were crazy when I saw Social Security last year give 5.9% boost. Now, that was, the Fed was still proclaiming transitory. But I said, how can Social Security be given a 5.9% boost when the Fed is maintaining that inflation is transitory? So we had all kinds of things so that's the way that I would do this. So you want to go 1%? Say we went 1%, but we're stopping on Fed funds. And then we'll get the steepeners going, because if they continue on with quantitative tightening, which nobody really knows the impact, but the bond vigilantes will have a really good run. And if you don't have to fight, it's okay. I know rates are going to 3.5%. They're going to hold them there. Great. Okay, I can live with that. Let me see my way through here. So I mean, that's where, and you got to defend against the stronger dollar is not a good thing. And Krugman wrote a piece last Friday, which kind of surprised me, because I thought he had many things wrong, by the way. Sure, but stronger dollar right now, I don't think is, I don't think it's working unless you're going to bring the global economy into a severe recession. And then you're going to unlock and unleash a lot of demons. And okay, if you're ready for them, let's go. Let's have at it. But if you're not, it's not a thing I would do. And I'd be very careful about this dollar here.
Mhm.
All right, let's get to Europe on the energy.
Sure. I just have one thought before, when you say they want unemployment down to 6% or up to 6%, if you think of all the help wanted ads out right now, what's that going to look like if they actually get it to 6%? The help, how is that possible? Just
The labor participation rate?
Wait, if they get what to 6%?
unemployment.
Oh, well, I'm gonna tell you what,
You can't find help now the way it is.
it's possible. You'd be surprised because when all of a sudden people stop hiring, you don't have to lay anybody off. Now all of a sudden you stop hiring, then the smaller and medium firms go, fuck this, they're gonna start paring back. And then exactly what's happening, what Powell wanted, and Neil Kashkari, he has his pom-poms out like an idiot, sharing the break in the equity and asset prices. Okay, you created the asset prices to be there, and now you want to take the air out of them. Fine, I get it, But if this is what you want, because he said, if you remember, Powell was very honest. I think it was back in May. When asked a question, he said, we know we can't do anything about supply shortfalls. The Fed cannot do anything about that, monetary. But he says in our toolbox, the only thing we can do is demand destruction. And the only way to do demand destruction, and I'm quoting him, I'm not paraphrasing, demand destruction was through wealth destruction. There's no other way. Because if you can't affect supply and you're out there proclaiming that inflation is continuing on an upward path because of supply bottlenecks, well, the only thing you can do is demand destruction. And I'll tell you what, I'm going to quote the great Joseph Schumpeter, who's my favorite economist to read, because I'm a political economist and he was the master political economist. As he defined pushing on a string, and it's a very important definition, and he diaried the Great Depression. So in his essays are great. If you can get a hold of Schumpeter.
Who is it, Ira?
Joseph Schumpeter. I have it.
Yeah.
As always, at my right hand. It sits by me. It's called Essays. And you can find it in used book sites. That's where I usually buy it. So it's all his essays from all different kind of publications. It's really a marvelous read. Marvelous to have handy because you could pick up and read it any place. But as Schumpeter talked about, look it, and it's true, and we're living it. I can stop somebody from borrowing by raising rates high enough. Because if I make the cost of money, which is capitalism, if I make the cost of money higher than the return you can get from borrowing, you're not going to borrow, everything shuts down. But he said this back in the 30s. But if I take it to zero and you still can't earn a return on that, even at 0 or 1%, you're not going to borrow. And that was the whole concept of pushing on a string. I can take rates low enough to all the way to 0, and I still can't get the economy kickstarted. Where I can, and that's the asymmetry of central banking, by the way. And I think I understood that. It's always worth keeping in your mind, because if you're entrepreneurs, and that's Schumpeter loved entrepreneurs, because those were the animal spirits that really drove the economy. And he watched them, and he watched the way they behaved and what they did, and when were they willing to borrow money in order to put into action some type of idea that was going to create jobs. But if you wanted to slow the economy, for whatever reasons, you're a policymaker, you can take rates. Volcker proves it. Volcker proves it. He took rates high enough to break the back of the economy in order to break inflation and then to rebuild itself. And then if you provide the right fiscal policies, you can do it. You know what? And actually that was the brilliance of the Reagan administration. And believe me, I was no fan of it while it was going on. I missed a lot of things. I just didn't understand them. But then Reagan, you get the Reagan tax cuts, which while money was tight, and that's one of the reasons the dollar went up, by the way, because there's nothing better for a currency than high short-term rates and low tax cuts, because that's where everybody wants to go to. That's serious and responsible policymaking. You know, right now, what the Biden administration did with student loans and even the Inflation Reduction Act, which is a joke, these are stimulative acts. And at Jackson Hole, there were several speeches after Powell's speech on Friday and Saturday, warning that if you have fiscal stimulus in the middle of the Fed tightening, you're just going to wind up in a spiral where the Fed has to continue tightening because you keep adding stimulus. There were several papers and there were just several discussions about it. Of course, it gets lost because nobody wants to tell that story. So you got to be very careful about it. And I will tell you something else. The student loans, Powell, because when I went back and I listened to a speech Powell gave because I wanted to revisit, it was in Chicago on June 28th, 2016. He was just a Fed governor. And that's when I had asked him a question at the end of it. I was actually there, but I hadn't realized the first question that was asked to him, it comes at the 40-minute mark. It was of an hour and 15 minutes. I just listened to it, I think on Monday, re-listened to it because I wanted to see something. But I was kind of shocked because Powell, the first question asked to him from the audience, and it was a lot of good questions, was about student loan forgiveness as a way to stimulate the economy. This is 2016. And Jerome Powell was opposed to it. He went so far, because he's a lawyer, to say that even in bankruptcy, it doesn't wipe out student loans. That's how opposed he was to that as a fiscal stimulus. I thought that was really interesting. So again, if you're pushing in fiscal stimulus while the Fed is tightening, you're not helping them. In fact, you're acting counter to them. And when they did the fiscal stimulus in the Reagan years, it was already after interest rates were at 14, 15, 16, 17, maybe 20%. You know, because don't forget, I think the prime rate, we don't even talk about the prime rate anymore, went to 22% at its highs. So all interesting things. And, you know, I don't know, but they can get to, believe me, if I was Powell, that's the route I would have gone. I would have left quantitative tightening alone. And if I really wanted to wring out inflation, I would have gone to 6%. If that's, you know, once I saw where inflation was, because you need to get short-term rates into positive territory on a real return basis. And on the, so what was the question about Europe with the energy? Sorry.
No, that's fine. Do you think it's bullish energies? I mean, so they go out there and put a price cap on there. Is that basically just fuel more inflation? Because, you know, then the consumer's like, well, I'm capped at paying this, and the government's going to have to pick up the difference. And how are they going to pick up the difference other than printing, you know, more QE through the EU again?
It's a great question, and I don't have an answer. They have some severe problems, but the problems are actually global. And then they come up with a cap on Russian oil. And for the life of me, I still can't understand why you think this is going to work. Well, this is what I'm going to pay you. I need what you have. But, you know, that'd be like you going down to the corner and buying your drugs and say, well, you know, well, yeah, you want $10 for that dime bag, but I'm only going to give you $2 because, you know, I don't like you morally, or I don't like what you're doing to my neighborhood. I'm only going to pay you $2. And what is he going to say?
Get bent. Somebody's got.
Yeah, hey, you know what? The price is now 20.
Yeah, right. Yeah.
So go hold up the 7-Eleven and I'll be here and come back and so I don't, you know, and they can explain to me, and I keep trying to understand it. How are these caps supposed to work? And then we'll go back to China. And what does China's oil imports, are we seeing real numbers? India and China are buying massive, they're buying all the oil that nobody else wants from Russia.
Yeah. Does it just open another door for them to you know, arbitrage that, you know, the Russian?
And if you get pissed at them, look at, if I'm a United States president and my economy was in a certain, and somebody offered me oil and I didn't take it, and my voters said, get the hell out of here. Because I'll tell you this, as long as we're on Europe, the Republicans can't get out of their own way. It's, you know, but if I was running for the Republicans, Joe Biden made that speech right after the invasion of Ukraine by Russia, that we would all bear some pain, right? We're all going to bear some burden for Ukraine. Well, I tell you what, now I'm looking at natural gas prices. We're back at 872 in the futures today. Hold on, let me get.
And you can't discount the amount of diesel switching that's going on to fire the electricity. So they're switching from nat gas at alarming rates, and using diesel and or crude equivalents to fire their electricity plants. And you know, the Northeast is, you know, in the United States, you know, we're at well below 5-year seasonal average. So we have a cold winter and Europe has a cold winter, there is going to be some serious issues going on here. And, you know, Granholm has in her back pocket to put an export ban on U.S. distillates. So we'll see if product starts to get lower. I mean, there's going to be some serious issues in the Northeast for heating oil.
Yeah, 100% right. It's 100% right. And the cost is great. But more importantly, because we've been shipping a lot of LNG, because don't forget, we cannot just turn it to market, and the spot market in LNG is very poor. It has been. It's never been developed because the infrastructure costs of building LNG terminals down in the Sabine Path in Houston and other areas was very expensive. And most of that money came from Asian countries who wanted to secure liquid natural gas market. So they were the ones who put the investment with long-term contracts. So the spot market in LNG really never developed. It's starting to now because we're moving stuff around. But my ad would be very simple. It would be 15 seconds. It would be Biden's speech about the burden we're going to have to bear, and just people opening up their utility bill now. They don't even have to say anything. It would just be a look on their face because you're asking a lot. And whatever's happening at the pump is being lost in the price of heating and air conditioning over the summer. And I look at my own, and I'm getting ready to move to solar. I just have to find somebody who I know will be in business, because I don't want to, that's the biggest problem with solar. You got a lot of small, it's like having small contractors doing work and all of a sudden they're not there. So I've talked to enough people. So that's the biggest part of my problem is, and my wife, who's so diligent in everything that she does, is really been working on this.
Ira, my neighbor was in the same situation as you, and he went to Tesla solar panels. They're expensive, but he said to me, he goes, I put my money on that Tesla's going to be around in, say, 10 years if I need warranty work or so. So he went full Tesla.
So a very good friend of mine down here did the same thing, he's a Tesla car fan. So, but it's much more expensive. And to get to talk to a person is an event in Tesla. I'm telling you, but
I imagine
the backup storage is very expensive relative to others. So
yeah.
I know. So I appreciate it. But one of the good falls is because my wife is so diligent and working on it, it led her to buy Enphase stock long ago, because my wife will buy stock, and Enphase has been a great. So I said, okay, you did well. So, you know, so I said, why don't you just put in Tesla? But she's such a hard nose. She says, no, I can't get them. I can't get anybody to talk to. And they send out a drone to do your home. Well, I live in a 625 home development. So even when my very good friend did it, and he loves Tesla, they droned they droned the wrong house.
No.
Because they just had a master address.
Right.
No, that's not my house. So, you know, they had to come out and redo it. So that left a bad taste in her mouth. But no, it may be one of the ways that I go, even though it's a lot more expensive, because you have to be, I want to do it. And his bill is about $12 a month now. Net. So, yeah. So, but Europe, this is a very, very dangerous situation. And again, I'll say it again, you may not want to hear it. Putin's sanctions are better than the US sanctions. And Putin told you, this can end if you pull off this, if you end the sanctions. So let's sit down and talk, but everybody's ego is so big. You know, the US foreign policy establishment, their ego is gigantic. We're the United States. You know, we're gonna be able to do this. Well, that's not helping anybody. Yeah. And Russia is still able to sell its energy.
And, you know, I mean, not just like you're not being political, I'm not being political either. He's not wrong. You know, he's trying to do the best for his people to not give his natural resources away. You know, he said on how many speeches, give his natural resources away for fiat currency, because I mean, that's exactly what, you know, if they do an energy cap, what else would they be doing? You know?
Yeah, I know. So, and he's got willing buyers, of course, because you have to have willing buyers. And you know what? Nobody's jumping to the US, you know, even like, you know, so Biden, which I never understood, went to Saudi Arabia after you scream and yell, and I'm not making a qualitative statement, but you scream and yell at them, and then, huh? And then you basically go there begging.
Yeah.
No, and even the Iranians who you're trying to make a deal with, Putin's already 2 steps ahead of you, because if the Iranians can sell their oil, they will buy Russian oil to refine, and then, you know, disperse all the distillates. So he's already moved ahead of you. Step back, take a breath, put your egos aside, and go, okay, this has been a terrible thing for the world. But how are we going to end this?
Yeah.
Don't tell me about saving face. Sit down and end it. Yeah. And it's been deplorable. But you know what? If I'm a Syrian citizen, if I'm in Syria, I look at this and I go, you racist motherfuckers. We've been dying here in thousands upon thousands for 10 years. We've been dying here. We don't have any advanced weaponry to fight, but nobody's giving a shit about us. So what is it really bothering you? It's a question that I can't get away from. And that was Putin, but that was, of course, because Obama made the mistake of inviting Putin in. So there's all kinds of issues here. Stop standing on this because we're your ego. Move your ego aside and figure out, how can I put an end to this?
is going to the table, going through it. That's the only way around.
Well, and Putin is being very successful in driving a wedge between you and your allies anyway. Everybody say, oh, this has strengthened NATO. Yeah, if I'm a foreign policy wonk in the US, yeah, it's straightened it. No, it hasn't. No, it hasn't. And adding more members to NATO is not a good thing. Because it's just a tripwire, right? It's more people you got to worry about.
Right. It's not the more members that are going to put money into it. It's the more members that are going to need money.
Yeah,
right?
And they're going to need you. So if Russia bombs Finland, are you going into Finland? So, you know, it's all things that why would you want that? I mean, again, Turkey's in NATO. Turkey is a big problem. And you have that goddamn collective action clause, and an attack on one is attack on all. Well, that's not a good thing. And I believed that for more years than you can imagine. Probably going back to graduate school. I just don't understand it. You open yourself up to endless wars and endless military actions. For what? Anybody could drag you in. And I don't trust Erdogan as far as I could spit. Not that it's important whether I trust him or not, but he's not been a good ally in any shape, in any way, shape, or form. And he makes you vulnerable and subject to all types of stuff. But I think Europe has, and they're trying to spin a better tale. There's no better tale. And again, it all comes down to Gerhard Schroeder anyway. So why don't you put him at the table and get this resolved?
Do you think some of these people is what they want? They want the military complex to have something to do endlessly.
I know that's so cynical, but I can't deny that it, you know, that's kind of like what is that? What was that movie in the 60s? In fact, I just watched it. How I learned to love the bomb. You know, they just want another war to fight. They just want another war to fight. So
profiteers, you know.
Yeah, you know, it's why. Listen, a lot of people make money in defense stocks. You know, we all have our bogeys and boogeymen. Me, I don't invest in defense stocks, but it doesn't make me morally superior. It's just something I don't choose because I don't respect the defense budget, and I haven't, and it's been a big issue for me for that. And if I really wanted to rein in fiscal spending, which I think runs out of mind, I first start with the defense budget, which is why I thought the Bowles-Simpson committee set up by Obama that he walked away from. And I actually read that report, and had Obama followed it, I would have been a big fan of Obama's, but he walked away from it because he got too much pressure. Because the first thing that Alan Simpson and Erskine Bowles wanted to do was cut defense spending 10% in order to rein in the rest of the spend, because everything starts with defense spending. And then you see the numbers they throw around, right? So again, if I'm in Syria, whatever Ukraine asks for, Ukraine gets.
Yeah. Yeah. And what about me? Why'd you forget about me? What did I?
And okay, you don't want the Syrians? Let me ask you about the Kurds. It's amazing how we fucked the Kurds so many times in this world. And they do it on their own. And they've been beat up and harassed and invaded and brutalized by Turkey, our ally. Right. So that makes you kind of complacent. The Kurds have borne a terrible price. But Europe is going to have a hard, and they can soft pedal it all they want. Because Putin's kind of interesting, because whatever they talk about, then he says no. And he told them, he was definitive. You want the oil, you want the natural gas flowing, take the sanctions off. He told them that a week and a half ago. It's amazing.
From Putin's standpoint, from a Russian standpoint, you know, we've talked about before Putin's sanctions being tougher than ours on him. From Putin's standpoint, would he want the dollar to continue to rally and to strengthen?
You know, there are a lot of people playing with that, by the way, that there's a conspiracy going on. Well, that they want the dollar to rally to break China. That's why they want the harm being done. I think it's, when I hear that, I go, wow, you're going to play that game. You better be really careful, because the system is far more fragile. And once that starts to break down, you're not going to control it. So I don't give hold to that. Does Putin want the dollar going higher? Well, actually, the dollar, the one currency that hasn't gone higher against, of course, is the ruble, right?
Mm-hmm.
The ruble's done pretty well, regardless of with what's her name had said, Jen Psaki, before she left. She called it the rubble, and then of course it did nothing but rallied. So I don't believe so. I really, because it is strangling a lot of places, and in places I just don't think so. I think it's, I think the dollar, and you see it, the dollar would sell off fairly dramatically if they had a sense that the Fed was not going to be as aggressive in raising short-term rates. Now, it's one of the things that Krugman said the other day. It's the long end that determines currencies. Long end rate. That's absolutely baloney. And if he wants to ever debate, I'll debate him anytime, any place, historically. In fact, Joseph and I actually talked about it in the podcast, not necessarily Krugman per se, but it's not the long end, because if you're fighting inflation, you don't fight it with the long end. The long end is a signaling mechanism. You fight it on the short end. You squeeze the shit out of overnight money and make it really expensive to borrow, and therefore to generate business ideas. You want to crush demand. Now, mortgages are set at the long end. Yeah, we know that. Unless, you see, if long-run rates went up, then of course we'd be back to floating to adjustable rate mortgages, right? So the mortgage industry always, but if you want to squeeze an economy and you want the currency to rally, I guarantee you, if the Fed raised rates to 5% at next week's meeting, the dollar would go to unbelievable levels.
Push on a string.
Well, it would just, rates would just go higher, and you'd go, and anybody who had dollar loans out would be forced to buy dollars. And that's what's going on now. And if your economies are slowing and you have dollar debts to pay, you got to go raise dollars. All right, I think we covered a lot of ground.
Oh boy, we did.
I believe that podcast is worth listening to. I think there's a lot to learn in there, and we'll do. The Jewish holidays are coming up, so I'm going to be traveling. So if you're going to get me, you have to get me one time next week. I'm going to San Diego on Thursday because my wife's aunt, 100 years old, passed away yesterday. She's an amazing person.
Made it to 100. God bless
her second husband owned a hot dog stand on North Avenue called the Shortstop. Deep Chicago roots, but she lived in San Diego. Her kids all moved there, so she moved there. But she is a phenomenal person. Just turned 100 in April. I saw her, thank God, in July, because she's one of my favorite people. And I had to fight with her for the check at the restaurant. I had to fight with her. She's 100 years old. She goes, "What's the difference? I'm not going to live long enough to." I said, "Bert, yeah, you give it to your kids. My kids don't deserve it." And I had to fight with her. I was fighting with her.
That's beautiful.
Oh, she's a phenomenal woman. I prevailed only because I could move faster. My wife says, "Yeah, you're a big man. You can move faster than a 100-year-old woman."
Well, thank you for coming in and spending this this couple hours with us. I've got 4 pages of notes, a lot of things to look up.
Yeah, and again, these are only good if we can make money.
Well,
the
right.
rest of it, it's all. You want gibberish? Go turn on the television. We find ways that we can make money, and these yield curves they will be very telling. And again, watch for the role of the bond vigilantes to push along in the curve. But I would tell you, I wrote the blog last night with the link. Didn't get published yet, but it's worth a listen to. Joseph Wing is very good, far better than, and I believe I would do another with him in a minute.
Oh, that's great. I can't wait to listen to the rest of it, especially after our conversation today. I'm glad I stopped listening so I can go back and now listen to it through the lens of today's conversation.
And I will also tell you one of the better ones on energy. You should listen to or read Doomberg, which is that Substack. And I did a blog with him. I did a podcast with him. It's a group. They're a consortium.
Yeah.
Doomberg is really good. Whether you agree with him or not, he'll make you think about things. They will make you think about things. Whoever that consortium is.
Yeah, that was good. I listened to that too. That was good.
Yeah. Yeah. All right.
All right. Have a safe trip and we'll talk
Thank
next week.
All right.
All right. Thank you. Thank you, Ira. I'll see you, everybody else back in Discord in a minute.